Today, I want to talk about an ETF that I think everyone should be aware of. And I think it's a use case for um, everyone that manages their portfolio actively to utilize this ETF in one way or another. So, I want to go over this article that I think does a great job explaining this category of ETFs that has recently emerged over the last year or so. The one that I personally invest in, and then just a bit more background on different strategies you can use this ETF for to compound and slightly increase your returns on your portfolio. So this article has kind of a funny title, calling these types of ETFs boring, because they are. They're not going to get very high returns, but they're extremely safe ETFs to put cash in. So they are cash equivalent ETFs. Essentially, uh, these ETFs pool investor money together, and then they go out and negotiate with banks to have savings account where they get higher interest rates on the cash than an individual retail investor would get. And then they take about a 7, 8 basis point management fee, which is very low for the total kind of income that they're providing. So this ETF, I don't like to call anything no risk, but it's very low risk because your cash isn't going anywhere. Your cash is staying in the bank accounts, and most of these ETFs are benchmarked at $50 a share of cash, and the value of the stock will go between $50 to $50.20 a month, depending on what interest rates are as you get closer to the payout date. But at current interest rate levels, these are paying out 4.5 to 5% in dividends paid monthly. So 4 to 5% on an annual payout, but you get a payment monthly. And they just continue to move and adjust as interest rates move. So if the Bank of Canada increases interest rates again in January, then these ETFs will probably have an interest rate closer to 5%. We're currently, closer to 4.5%. But how I think lots of people can be using these ETFs is throughout the month. If you have a lot of cash either in your bank account or in your investment account, it's very little risk or harm just to take that money, throw it in these ETFs, and then as you need the money to invest in stocks or pay your bill at the end of the month, you can take it out, cover those expenses, but you're going to always end up with either a higher share price for the accrued interest over the month or a dividend payment of 0.4% just for holding in that ETF that month. So in a world where interest rates are back up, I believe this is worth doing. Obviously, it depends on how actively you like managing your money and your portfolio. But generally speaking, I think being able to get a free 5% for anyone who has lots of cash sitting around, they should consider ways to leverage and utilize these ETFs. So one thing that I find funny is lots of the big banks in Canada don't even allow customers to buy these ETFs on their platforms, which is ridiculous. But it's because the returns that you can get are higher than their personal high interest bank account, high interest savings account products. So it makes them look bad since they're taking advantage of their customers essentially by not giving them the full spread that they can on their capital. Whereas this ETF gets them a lot closer to that. I would argue for educated investors, not giving them access to a publicly traded product makes them look even worse. So I hold this in a couple different of my investment accounts that are not with these banks. One's just a no cost brokerage in Wealthsimple, who does let you invest in this ETF or these types of ETFs. And the ones that I actually invest in is Cash, so Horizon High Interest Savings ETF, and you can kind of get a good sense of a visual sense of how this ETF works. So they hold $50 in cash for every share that they have. And you can see throughout the month as the time goes by, accrued interest that's about to get paid out gets closer, the value of the ETF ticks up. So unlike holding a GIC or other cash products that drive a return, you can pull this out anytime, and that's why I love it. You can pull it out midway through the month and sell for $5.10 a share instead of the $50.10 a share. Sorry, instead of the $50 you put in. You can wait till after the month, sell for $50 again, and you'll get your dividend of 20 cents a share, depending on what interest rates are. So this is really just a cash product. I don't understand why I'd invest in a GIC right now for 5% when I can invest in this product for 4.7%, I think is the current yield, if I have all the flexibility in the world. I guess the answer to that question is if you wanted to lock in 5% for 3 years, 5 years, 10 years, then that's where you go to a GIC. But I'm not really looking to lock in money for that long. So this product works really well for me. Obviously, this has just been skewing up throughout the year as interest rates have gone up. It's variable on the interest rate, though, since it's just cash sitting in an account. So as interest rates move potentially downwards, this will go the other way. But I don't see any downside in parking cash here, since you're never going to go under the $50, which they hold in cash for you. Just another visual. So this just shows kind of the monthly payouts depending on what interest rates are and the amount of interest they're able to yield off of the high interest savings account that they hold your money in. So you'll kind of see the rate has gone from like 2.5% to 4.5% over the last 6-7 months. In July, they were paying out 12 cents a share. It looks like interest rates may have ticked down super briefly. They only paid out 10 cents a share in August, or September rather. And then it's just been going up since then, 14, 16, 17, 19. So this isn't an account that's going to make you rich by any means. But, you know, if you hold 10% of your portfolio in cash, and then putting it into an ETF like this, you're going to get an extra 4 or 5% on that 10% of your portfolio. And then you can just take that money out throughout the year that you're getting paid in dividends, you know, reinvest it in this or invest it in other stocks. How I personally use it is I'll hold money there as a cash replacement. So I'm not necessarily investing in it as much as I'm holding money in it between making investments in other securities and stocks or other assets. So instead of holding, you know, 10 grand in cash in an investment account, maybe I'll just throw it in here. I'll get 30, 40 bucks in interest over the month. But then as soon as an opportunity comes up to invest that in a stock I'm looking at or whatever else, I'll without hesitation pull it out. So I don't really look at it as a part of my holdings, as I look at it as just a better place to park a cash balance. But you know, if you have a lot of money coming into your checking account before you have to pay bills, you can always drop it over into an ETF like this, take the difference. It just depends how hands-on you want to be. But I think an ETF like this has a role in every Canadian investor's portfolio. Lastly, just management fee. Always good to take a look at that whenever looking at an ETF. They have under 10 basis point management fee. So, you know, they're probably yielding on right now, I think they're paying like a 4.6% dividend. They're probably really yielding 4.7, taking 0.1. For their ability to get me a higher savings account interest rate than I'd be able to get myself, I'm happy to pay the 0.1%. I think it's a good financial product for what it is. So nothing crazy there or watch out there. So yeah, I'd be interested to hear anyone else's opinion on these types of ETFs. Do you use them? I know there's other ones in Canada. I haven't found any in the US. So is anyone aware of a US product that's similar? Maybe a short-term bond holding in the US or something like that. But I just wanted to share this one with you today because I think as we continue in an environment with high interest rates, these are the types of products that we should consider if we're holding, you know, lots of cash, trying to wait for an entry point into the market, or just have a large cash position on the side right now. So thank you guys for joining me for this video. If you like this type of content, please consider subscribing to the channel. I'd really appreciate that. If you have any thoughts on this ETF or these types of ETFs, would love to hear from you in the comments. And if you enjoyed the video, please drop a like as well. Thanks, guys.